Good Saturday morning, traders. This is Sam, the Trading Geek, with your weekly review and preview for March 22nd, 2025. Hope you had a great trading week and a good start to your weekend. We're looking at major markets for yesterday, and we saw the Magnificent Seven going up about 1.35%, and we had the Qs up a third of a percent, dollar up 0.32%. Vanguard total market index just basically flat. VIX losing about 2.63%, but kind of a mixed day overall. Most things were slightly down, but it was a triple witching options expiration. So a lot of back and forth, a lot of nonsense moves, and we'll truly know what's going on Monday when a lot of the options that were closed out may be replaced on Monday. We'll see. For the week, we're looking at gold up 1.2%, hitting a new record high. The Dow Jones is up 1.03%, and total market index about 0.2%. VIX losing about 11%, along with the Mag 7s overall on the week losing 0.76%, and Bitcoin losing about 1%. And then just a little bit slight upward movement, and giving us our first up week in about 4 or 5 it is. So looking at year to date, we're coming in on quarter end for 2025, the first quarter, and we can see gold is the outperformer in the major markets. VIX still up 11%, and long-term bonds, 20-year bonds, CLT up almost 4%. That's nice. And you can see that the aggregate bond index was up 1.9%, and even high yield bonds are up. But everything else, look at the Mag 7 really losing ground, and correcting after a torrid run over the past couple of years. So that was to be expected. Micro caps down 10.85%, and Bitcoin down 10% on the year, and small caps down 7.75%. And you can see the Qs down about 6%. So generally, so far, not a positive quarter overall, except for gold and bonds. But we still have about 6 trading days left in the month. So we'll see what happens. If we look at the sectors on Friday, mixed bag. Communications up on the back of Facebook, and the consumer discretionary 0.36%, with Tesla being up and retail up a third of a percent. But overall, most major sectors and minor sectors were down on the day. So another par for the course for a triple witching expiration. On the week, we saw energy at strong, about up 3%, and retail up 2.25%, with financials gaining back some ground, up about 2%, and the conservative, or I should say, defensive play of healthcare up about 1.15%. We saw the metals and mining down 0.52%, despite the strength in gold, and even the defensive sector, the consumer staples, down about 0.25%, as were materials and the utility. So kind of a mixed bag on the week. So looking at the sectors on a quarterly basis, we can see that XLE is the strongest year to date, along with the healthcare still pretty strong, and utilities, financials, and real estate. Worst are retail stocks and consumer discretionary. That's with Amazon and Tesla being very weak, as of course tech down 8%, and transports. Again, a lot can change in the next week if there's a catch-up play into quarter end. On a daily basis for the industries, yesterday, internet stocks were up, so were blockchain stocks, and biotech up 0.6%. And then the pot stocks down 2.24% on the week. Looking at a week on a daily basis, looking at the weekly, we can see that exploration and production up 3.5%. PEJ entertainment and the defense stocks up 2.3%. Worst on the week, the Chinese internet stocks taking a breather along with the pot stocks down in the basement. And then finally, on a year-to-date basis or quarter-to-date basis, GDX gold miners, by far the leader. Chinese internet stocks up 21.68%, and then defense stocks, not defensive, the defense stocks, Lockheed Martin and Raytheon and such up 6.64%, 6.46%. Cyber stocks up 2%. Worst of them being pot stocks. Still can't catch a break in 2025, years and years, and this just keeps going down. It's getting closer to zero. Software stocks, after a torrid run in the fourth quarter, up down 11%, and ITB home builders down 8%, with blockchain stocks down 8%, and the semiconductors giving up 7%. So anything can change over the last couple of days. And then finally, we'll take a look at the Mag 7 for the week. And we can see NVIDIA lost about 3.26%, whereas Apple gained about 2.24%. Then you got everything in between. And on a quarterly basis, year to date, only Meta is up on the year, and that's a mere 2%, with Tesla bringing up the rear, down 38%, and Apple down 12%, Microsoft down 7%. So not a great start to the year for Max 7, but well-deserved break for all of them. That kind of covers what I wanted to recap in terms of the indices on the week and the quarter. Let's take a look at what's happening with the major indices. And you can see I have a daily chart, a weekly chart, and a monthly chart. So I like to look at things on kind of a top-down basis, multi-time frame. And you can see I have my Fibonacci retracement on here from the August low to the February high. And you can see we're stuck right here around the 50% mark. That's where we ended up closing on the week. We came all the way down to the 61.8% retracement. But if we look at this, taking away this Fibonacci retracement, we can see that we are at risk here of taking out this parabolic stop and reverse volatility stop on the monthly. Again, we have 6 more trading days to go, but we stopped one time framing, meaning going up during this month. And you can see the MACD is starting to flip over. So these last 6 trading days of the year, of the quarter, I should say, are really important to see how this monthly candle is going to shape up, because it really determines how the market shapes up over the next couple of months, and kind of the outlook. We have not seen us violate this 8 EMA on a closing basis, I guess, since back here, which was February 2023. So a nice steady uptrend, and deserving of a pullback. And we can also see coming off the overbought level on the monthly and looking at the RSI. Taking a look at the weekly chart, you can see MACD is solidly negative, though still above the zero line. That doesn't bode well for the weekly, but it can get rehabilitated, as we'll see in the daily. We're stuck right at the 50-week moving average. That's a simple moving average. And we have taken out an ATR trailing stop. So we need to start showing some strength. Big long tail on last week's candle, and kind of a doji here, kind of indecisive. But again, the options expiration does have an influence on what happened this present week. And I would dare to say that the quarter end is more important than everything that we saw this week in terms of determining how this quarter is going to finally look, and whether we're going to get that long awaited rally or bounce back that we have. Zooming in onto the daily chart, you can see here that we stayed right in the middle between the upper edge of the expected move and the lower edge of the expected move for the week. So it was kind of a sideways week. You can see 5 candles up and down, but really not doing a whole lot. We saw that the SPY was flat on the week. Good news here in the MACD, the fast line is trying to curl up over the signal line. So that would be good if we could start seeing some momentum on the daily, which ends up helping the weekly and ultimately the monthly. But again, it's all about what happens into month end. And it really looks like the market is trying to find its footing and give us some type of rally into the end of the quarter and into April, which is typically a seasonally positive time of the year. So that's the SPX, and I'll go through the NDX a little bit more quickly. You can see they look very similar, and on the monthly, the MACD is flipping over. We are here. We touched the bottom edge of the expected move last week and bounced right off of it. But again, one-time framing has stopped. We're out of the kind of overheated area on the monthly. Weekly looks similar to the SPX, under the 50-week moving average, and a negative MACD, though still, again, above the zero mark. Another sideways look for the candles last week, going nowhere, but the MACD does start to look positive here, and see if we can't gain any strength. But again, we were well inside the expected move, kind of going nowhere on the week. Par for the course when you know it's a triple witching quarterly expiration. Finally, the RUT or the small caps not looking as good as the others, but you can see here MACD is a little further along in crossing the fast line over the signal line, but nowhere near the strength in the SPX and the NDX. So this has been one-time framing down since we peaked back in November on the Russell 2000 small caps. On a weekly basis, 1, 2, 3, 4, 5 weeks, down weeks in a row, we finally got an up week with a bit of a topping tail, negative MACD. But we do have the RSI in the oversold area at 38. 30 would be really oversold, but we can also see on the daily chart that we showed a little bit more strength than the SPY or the SPX and the NDX. Really not going anywhere. We went up, we went down, but kind of going sideways. We touched the options implied expected move up here and closed down here. So the MACD on the daily is showing a little bit more progress than the NDX and the SPX. So that could be a positive sign for the small caps if it wants to show us a little bit more strength and lead the way towards getting to some decent recovery. We do have a bullish parabolic stop in reverse, meaning this volatility stop has been triggered to the upside, and that's been 5 days now. Now we got to flip this next chandelier stop here at about 2106 to see further upside and perhaps get up to this 50-day moving average, one step at a time, and perhaps we will get there. Taking a look at the options implied expected move, let me maximize this, and we look at the SPX. We're looking at about 109 points on the week. Here we go, plus or minus 109. Still would be a buyer of short-term options, not a seller. So this is down from last week where we had about 132 points expected for the week. And then if we come back to the charts for a second, taking a look at the VIX, we saw earlier that the VIX lost about 11% on the week, and right under the 20 level where a lot of people look at, but the long-term average of the VIX is the 1950. So you could say we're slightly below average and slightly below the expected move for the week. So came down off a boil. We got up to a high of about, we barely touched 30. We didn't even get to 30, 29 and a half. And we're basically lost about 33% off the peak. And you can see on the weekly, After peaking the week before last, we came down and are back where we started here during the week of March 3rd. And then you could see on a monthly basis, this has just been going sideways, and we had a spike up and we're back down on the monthly. If we want to take a look at the options, as I like to do, to kind of give a little bit of color on where VIX options are trading. And what I like to do is take a look at the current price of the VIX, which is at 19.28. Let's call it 19. And if you look out $1 out of the money and $1 on the calls and $1 out of the money on the puts, and you see what the relative pricing is. And you can see that the 18 puts are trading for about call it 78 cents, and then the 20 calls are trading for, say, $1.40. So definitely a skew towards pricing on the calls, which means that they're buying more calls than puts, and that would argue for a little bit slight advantage to the bears, but not much of all. I mean, it's barely 2 times, and sometimes this has to get to about 5 or 6 or 7 times on the call side versus the put side to say that they're really buying volatility, preparing for a down move in the SPX. Looking at the economic calendar for next week, we have several economic reports, PMI, services PMI, manufacturing PMI on Monday, and on Tuesday, Case-Shiller Price Index and Consumer Confidence, durable goods on Wednesday, our typical initial jobless claim, and the second look at GDP. And but more importantly, on Friday, we have PCE, the Fed's preferred measure of inflation, coming up at 8:30 before the open. So that'll be the biggie on the week. Taking a look at earnings for next week, we're winding down the quarter as we are winding down the earnings. And so not a lot going on, but after the close on Monday, we have earnings from KB Homes. Before the market opens on Tuesday, we have McCormick, the spice company, before the open, GameStop after the open, if you're into playing the meme stocks. And then you have Chewy and Dollar Tree Wednesday before the open, and Paychex as well. So these are kind of the last ones to report. Cintas, the uniform company. And then on Thursday, you got Winnebago before the open and Lululemon after the close. So some major names out there, nothing really to speak of on Friday, but for the most part, we're winding down this quarterly earnings because, again, this starts all over again April 1st when the new quarter happens. So getting back in conclusion to talk about this market, it's really trying to rally, and looks like we have a good shot with a solid close on Friday. Some people say, you don't fade Friday, so we'll see. We've had 3 Fridays in a row that have been closing positive, so that's a good thing. Hopefully, we'll get some follow through on Monday. We did get follow through on Monday, but then we went sideways for the rest of the week. So the advantage here with the oversold parameters is to see a little bit more strength in a rally into quarter end. We'll see if that happens. Still considered very volatile, very choppy. Just be careful out there. I don't see any reason to make any big bets or try to, unless you're trying to catch a long-term move, you're being an investor when you're buying something. These short-term trades are really lasting sometimes minutes and not necessarily hours. So you got to take your money off the table until we get further into the teens in terms of the VIX. This is just going to be a choppy back and forth market, and hopefully it will calm down a little bit and not be as exhausting as it has been. So be careful out there. Trade them well next week. Thanks for watching. And if you have any suggestions, at TraderGeek on Twitter, give me a follow, or TraderGeek Sam in the forum. Take care, and I will talk to you next time.